What's up, ladies and gentlemen? Welcome to the Beat of Business with me, Ravi Wadan. And today I want to give you all three incredible stocks of three incredible companies that I'm pretty sure will have a market value or a market capitalization of over $1 trillion very, very soon. Not very long ago, having a market cap of 100 or $200 billion was really impressive, let alone having a market value of $1 trillion, which was absolutely unheard of. But in recent years, things have definitely changed. These days, we have multiple companies with valuations of over $1 trillion, and Apple was the first company to pass the $1 trillion mark back in 2020. And today, Apple is hardly the only company with a market value of greater than $1 trillion. Now, Apple is worth $2.91 trillion, Microsoft is worth $2.56 trillion, and Alphabet is worth $1.94 trillion. That means that if you wanted to buy every outstanding share of Apple out there, it would cost you $2.91 trillion, which is just crazy to even think about. But in today's video, I want to talk about three companies that I believe are poised to be worth over $1 trillion in the very near future if they can maintain their success. And I strongly believe that all three of these companies will be able to do that based on their business model, their long-term strategy, their core product offerings, and their competitive advantage over their competitors. So with that, let's jump straight into the video. And if you guys could do me a quick favor and smash that like button and smash that subscribe button, it would be greatly appreciated because I'm dropping awesome videos like this multiple times a week. The first company on my list is Salesforce, ticker symbol CRM. Now, Salesforce has been around since 1999, and since then, it has grown into an absolute behemoth of a company. If you want to hear what, in my opinion at least, is the best explanation of what Salesforce does, here it is. Salesforce is a customer relation management solution that brings companies and customers together. It's one integrated CRM platform that gives all your departments, including marketing, sales, commerce, and service, a single shared view of every customer. I was looking at and going through Salesforce's latest investor presentation, and I was actually surprised to find out that Salesforce is the fastest growing enterprise software company ever in the history of the planet, growing at a faster rate than Microsoft, Oracle, and Adobe. Salesforce has been faster than these other companies to $5 billion in revenue, $10 billion in revenue, $20 billion in revenue, and the fastest to $31.8 billion in revenue. I mean, just look at these numbers that Salesforce has been able to generate. At the end of fiscal year 2014, they generated $4.1 billion in revenue, and for the fiscal year 2022, they have a revenue guidance of $26.35 billion, which is a compounded annual growth rate, or CAGR, of 26%, which is unbelievable. And when we look at their total addressable market in the future, Salesforce is in a really good spot because according to the IDC, spend on digital transformation from 2019 to 2024 is going to exceed $10 trillion. And in 2021, spending on future of work technologies is expected to exceed $1 trillion. And according to the IDC, 57% of total technology spend will be on digital transformation in 2024, which is up from 42% in 2020. And if you're unfamiliar with Salesforce's clout relative to its cloud computing peers, take a look at this list. As it stands right now, Salesforce is nearly 3 times larger than both of its next biggest cloud computing peers, ServiceNow and Workday. And perhaps the biggest reason to own Salesforce stock is because its 150,000 plus customers are very committed to the company, and that is showcased by Salesforce's customer attrition metrics, which showcase that Salesforce has a customer retention level of 91%. And that means that once a customer signs up for Salesforce, they don't leave. And that 91% retention level is perhaps the highest retention level in the entire industry. And if we go and look at some of Salesforce's key data points, it is currently trading at around $266 a share. It currently has a market cap of $262.163 billion, a PE ratio of 146.40, and a 52-week trading range of $201.51 on the low end and $311.75 on the higher end. And it's always interesting to see what analysts have to say. And of the 46 analysts that are covering Salesforce stock right now, its recommendation rating is a 1.8, which puts it in between a strong buy and a buy. And it currently has an average analyst price target of $327.10, which is substantially higher than its current trading price of around $266. The second stock on my list is Costco, ticker symbol COST. Now, Costco is the world's third largest retailer, and it's another stock that, in my opinion, could grow from its current market value of around $246 billion and one day become a $1 trillion company. Costco does a better job than any other retailer on the planet of taking care of its three main stakeholders. And those three main stakeholders are its customers, its employees, and its shareholders. As of today, Costco has 815 warehouses worldwide, with 564 of those in the United States, 105 in Canada, 39 in Mexico, 30 in Japan, 29 in the UK, and even one in China, which I didn't even know about until I was doing research for this video. In terms of its membership rate, which is Costco's bread and butter, they currently have 61.7 million households with Costco memberships, 111.6 million total cardholders, and a beautiful 91.3% renewal rate, which is simply incredible, and they generate $3.9 billion a year in membership fee income. If you are a frequent shopper at Costco, you know that Costco really fills in a unique niche within the retail industry that no other retailer, including Amazon, including Target, and including Walmart, can fulfill. And that's why people that become Costco members stay Costco members. Personally, whenever I'm shopping for pretty much anything, whether it's my scotches, my bourbons, my electronics, my golf equipment, or my computers, I always look to see what Costco is carrying before I even bother shopping anywhere else. And you know why I don't really bother shopping anywhere else? It's because I know that Costco only carries the best products, and I know that Costco's buyers have reviewed and tested each product extensively. I know that their warranty and their return policy is better than any other retailer on the planet, and that gives me a lot of confidence whenever I purchase something big or small. And you know when you shop at Costco that you're getting a fair price on whatever you buy in the store. Costco makes a bulk of their money off of their memberships because the margins on their goods are simply not that high. But this business model allows them to undersell the competition and ensure customer loyalty. And guess what? Costco doesn't spend a dime on advertising. I mean, have you ever seen a Costco commercial or a Costco banner ad? I didn't think so. Costco is uniquely situated, and I foresee Costco continuing to grow over the years and decades to come if it can maintain its business model and its competitive advantage, which I strongly feel it will be able to do. And with that, let's go over some key data points on Costco. It is currently trading at around $558 a share. It has a market cap of $246.785 billion. It has a PE ratio of 48.03. It has a 52-week trading range of $307 on the low end and $561.27 on the high end. And it's always interesting to see what Wall Street analysts think of a stock, and currently Costco has a recommendation rating of 2.2, which is in between a buy and a hold, and it has an average analyst price target of $542.22, which is actually below its current price of roughly $558. Stock number 3 on my list is Shopify, ticker symbol SHOP. Now, Shopify's mission is to make commerce better for everyone by helping people achieve independence by making it easier to start, run, and grow a business. They believe that the future of commerce has more voices, not fewer, so they're reducing the barriers to business ownership to make commerce better for everyone. Put in a simple way, Shopify is an all-in-one e-commerce platform to start, run, and grow a business. Honestly, I know a bunch of entrepreneurs that use Shopify, and they all have nothing but great things to say about the platform. You see, with Shopify, they pretty much take care of everything that you can think of. They take care of the payments, they take care of the capital, they take care of the marketing, the analytics, the inventory and fulfillment, the order management, and the shipping. And they offer something for merchants of all sizes, from Shopify Basic, which costs $29, $99 a month for smaller brands, all the way up to Shopify Plus, which can cost upwards of $2,000 a month for larger brands. What Shopify's been able to do is pretty much simplify and lower the barriers of entry to starting your own business. I mean, their entire ecosystem takes care of everything you need, from payments to marketing to fulfillment, with the use of their easy to use platform. I mean, just take a look at this chart. Shopify's share of the US retail e-commerce space sits at 8.6%, which is only second to Amazon's 39%, but it's ahead of Walmart, eBay, Apple, Home Depot, Best Buy, and Target. In Q3 of 2021, Shopify did $1.123 billion in revenue, which is extraordinary and is 46% higher than the end of Q3 2020. And their monthly recurring revenue is growing at a 43% compounded annual growth rate. In Q3 2016, they had $16.3 million of monthly recurring revenue. And in Q3 of 2021, they had a monthly recurring revenue number of $98.8 million, which is simply phenomenal. To be honest, Shopify has such a unique product offering that allows any of us to become entrepreneurs and any of us to follow our passions and our dreams with one simple, easy to use platform that takes care of everything a business owner would need to take care of. And if we take a look at some key data points on Shopify, you will see that it is currently trading at around $1,400 a share. It has a market cap of $175.116 billion. It has a PE ratio of 51.65 and a 52-week trading range of $1,005.14 on the low end and $1,762.92 on the high end. It's always interesting to see what analysts have to say about a company, and currently Shopify has a recommendation rating of 2.1, which is in between a buy and hold. And of the 36 analyst price targets that are currently circulating, there is an average price target of $1,675 a share, which is higher than its current price of $1,394 a share. In summary, all three of these companies have been growing at an extremely rapid rate, but they still have plenty of room for further growth because each one of these companies is uniquely situated to absolutely dominate their respective industry. I wouldn't say that any of these three companies are trading at bargain basement levels, but if you are a long-term investor, I strongly believe that you will be handsomely rewarded because all three of these companies are positioned to be trillion-dollar companies over the coming years. But as always, please do your own research and please do your own due diligence. This video is intended to be a part of that research and a part of that due diligence. And with that, ladies and gentlemen, I'm going to call it a video. Thank you all for watching. Please remember to smash that like button and smash that subscribe button, and I'll see you all next time.